Yeah, I'm losing my edge.
That's a great point to make, and it's something that me and my old friend Pete Bolmat, like we always joke about, which is, oh, if I'm gonna buy, like if I'm gonna buy this equity market, and then I move on to what's my next trade idea? Oh, well, it's buying this other equity market. It's like just stay on the first one and click it twice.
Yeah.
I'm sorry, but like just size up. It's almost when push comes to shove and all this stuff is moving, it's almost like don't even waste your time going to that other equity market. Just size up. You're exactly right. Because I think, you look at a chart like this and diversification is awesome for in the respect of like, I've got $10,000 and I want to invest it for the next several years. And so I'm going to buy some technology stocks. I'm going to buy some cryptocurrency. I'm going to buy some gold and silver and whatever else. That stuff is great. But if you're day trading and you see red in your watch list, and your idea is, I'm diversified, I'm just going to buy all of them. I mean, 9 times out of 10, it's going to be either really good that day or really bad that day. And so to me, from a day trading perspective, diversification, Errol, is buying something and selling something else. And you can still, at the end of the day, we'll see where this concludes. You can still be long stocks. Like here, we're looking at technology stocks and the Dow. And you can see yesterday's action. That red line is down a little bit. That white line is down a lot. Well, I can diversify here when volatility is picking up and I'm trying to day trade equities. I can buy that underperformer and maybe I buy 2 of those underperformers there. But to diversify and give myself just a little less risk in the trade, I'm going to sell that outperformer. So if stocks bounce back, 1, I'm overweight long stocks because I bought 2 of the white line and I'm selling 1 of the red line. But 2, hopefully amid that bounce back, the one that underperformed bounces back even more heavily than the one that didn't really see a lot of the selling there. And so it is this idea of like, don't just buy all of the equities, buy some of the stocks that are performing worse. And if you want to size up a little bit in that, do that, and then hedge it with some shorts in the stocks that aren't seeing some of that selling. Does that make sense? It's like kind of like some day trade diversification in equities.
Yeah, no, that does make sense. One question that kind of comes to mind is, I know you kind of mentioned, let's say we buy 2 sticks, we sell 1 MYM. What if we had just bought in 1 sticks and sold no MYM? I know we're talking about diversification, but is there a point where people will just like, at this point, I just want to take more risk off, but I still want skin in the game? You know what I mean?
Yeah, for sure. I mean, to me, it's always this idea of like, and I'm glad you kind of broke it out like that. And first of all, we're not using, for the heads out there that know all of this stuff really well, these aren't appropriate ratios. In fact, like you need 3 sticks to block out 1 MYM here because the sticks is smaller. So, but we're just simplifying it for today's conversation. But I'm glad that you broke it out that way, because I do almost view it as 2 trades where it's like, okay, I got my long, I want to be long equities amid this fall, right? And so I'm buying a sticks, but in my same portfolio, I almost have this different strategy that's diversified from my long sticks, where I'm long sticks and I'm short the outperformer. And so that way, diversification, the whole idea, it sounds, it's not a mono, it's a multi-syllabic word. It's a big word. And it sounds scary to a lot of people. The central idea is like, I want just part of my portfolio. Sorry there. I don't know how that popped up, but I want part of my portfolio to be doing X while the other part of my portfolio is doing Y. And so if I'm, instead of just buying sticks flat out and I buy, 2 or 3 or 4 of them, instead I buy 2 of them and I use that other unit to sell an MYM. Now I've got different parts of my portfolio doing different things as volatility is picking up and stuff is moving around. And the same goes for different asset classes as well, Errol, like metals yesterday getting pounded and metals continuing to get pounded here today. And it's this idea of like in the commodities space, similar to the equity space, it's not as one for one. The correlations aren't as robust, but I would rather buy some metals, maybe buy one or two spree contracts and sell a crude contract, than just go full boat into metals and live and die by commodities in general, doing well or, not doing well, and my whole portfolio banking on that. Is that still making sense, even though we're outside of stocks?
No, yeah, it does. One thing I kind of question now is, when are you going to choose to kind of go, this diversification route rather than just outright selling or buying spree? Like, when are you going to be like, oh, I want to sell something or buy something with this? I want to be a little more diversified right now.
Sure. So diversification, what we're looking at here today is timely. I'm doing it for a reason on a week like this week. I'm looking to buy and sell things against each other most days, but especially when volatility picks up.
Okay.
Like if we're in pretty chill times, like equities are kind of wiggling around, but volatility in the equity market is at, 15 or 20%, just like, which is to say, like, normal times, and metals for whatever reason are up a lot or down a lot, then yeah, I'm just trading metals alone. And I don't need to necessarily kind of create some hedges or some diversification in crude oil or, in a different metals market like industrial metals or something like that. But when volatility picks up, and I keep coming back to this idea because I felt it yesterday and today. I open my platform. I look at the thing that Frank is always dead set on, is like looking at the net changes of all of these markets. Because as a day trader, that's what you're kind of obsessed with. What's the net change today? And when I open my platform and I see big fat net changes on almost every asset class, it's this idea of like, well, I can't just buy all of them. Like I just can't. Like if I do, then I'm like I say, it's either going to be really good or really bad. But if I open the platform and it's like, oh, there's two or three things that are really moving, everything else is chilled out, then I'll just focus on those things and kind of look for day trading opportunities around that. So I guess that would be, you want to be diversified always. You always want to be getting some longs and some shorts in the portfolio there, but especially when stuff starts to pick up here, because that's when you can really get whacked. Like you don't want to, when stuff picks up and everything is moving twice as much as it used to, and you're only long everything. Yeah, it can be great, but it can be really bad. And that's when, futures and options in some of these derivatives markets can take out your account. And that's what we don't want, friends. But let's move on to a different idea here, which is kind of going outside of the asset classes, which is the third piece that I still think is very fruitful for your portfolio to get in there. And it's actually working out a little bit here today, which is, in my mind as well, it's not a matter of just like stocks against stocks, commodities against commodities, interest rates against interest rates, and foreign exchange against foreign exchange, and on down the line. I always think of these things as like crude oil, stocks, yields, and a lot of these markets are risk on markets. And so if yields are, holding in and they're not seeing downside, and stocks are seeing downside like they did yesterday, then I'll get some of those longs in the stock market there, and I'll throw out a short in the yield market. This has been a great trade the last year. There's been plenty of times where I've been buying yields and selling stocks at the highs. I mean, look at these instances where yields are moving lower and stocks are moving higher, and they came back really well. Looking at the same thing in reverse on a week like this, whereby, stocks are getting hit, but yields are kind of hanging on. And you can see a little bit today, the idea here with diversifying is, yes, you're managing risk, and that hedge isn't likely to pay you. It's likely to actually take out some of your gains from your initial long stock trade in this scenario. But on a day like today, what you're really hoping for is like, oh, okay, maybe yesterday I bought sticks and I sold S10Y. And then today you see, oh, sticks and technology stocks are making a comeback. That market's up maybe 50 cents or $1. And the S10Y market is only up like 5 cents or 10 cents. It's kind of unchanged. And that's really nice to see, as opposed to the alternative, which is, oh, I bought both of them, and then today they're both down $1 or they're both up $1. And that's just not what you want. You want this kind of scenario where it's like, everything's down, and maybe I put in, 4 long trades and 2 short trades, and my P&L isn't necessarily 500 plus or 500 minus, but it's hopefully, 300 or 400 plus and maybe 200 minus. That's a really nice scenario, especially if you do so in a smart way where you're looking for extremes, Errol, of like, I'm trying to buy the thing that's down a lot and sell the thing that's not down a lot. Then hopefully you get, 3, 4, 5 of those winners and only 1 or 2 or 3 of those losers into that crash, as opposed to just buying everything. Diversification in a lot of these day trades means getting some shorts on in this crash as well. You can't be afraid to sell, even if everything is moving lower.
Yeah. Is there anything that's in particular that has stuck out to you? And is there a number of positions that you feel comfortable being in, knowing that you're day trading these? Like, oh, I don't want to, because you're managing them. Maybe you don't want too much on your plate at once, or what?
I haven't really hit that point. And what's been really nice, and I guess, we can pull up the platform here, and now technology stocks starting to turn around, but they saw, a nice bounce back here that, depending on where you got in, you could get out of that. And then you could hopefully get long again, lower from that day trading perspective. But what's really nice, Errol, is I used to have to fear that with a lot of these larger products like the NASDAQ or even the micro NASDAQ, because as an account holder of just, 20, 30 grand here, it's like, if I put on, 2 or 3 of these micro NASDAQ or S&P or what have you trades, I'm full, like I don't have any more space. What's been really nice is doing so in the small exchange here. I haven't really reached that point. Each of these markets, we designed them so that each of them only moves about, like $100, maybe 200 at most on a daily basis. I mean, look at the net change. The biggest one, crude oil, is up about $200. And see, I got some short crude in here at 79.63. I'm up 50 cents on that. But yeah, I'm underwater on some sticks longs here that I got long from right around here. But I didn't actually mean to do this, everybody, but like, this is a great example here where it's like stocks fall yesterday. Frank buys technology stocks too early. Like, technology stocks fell another full $1 here. But what I did, as I'm losing or what have you, is I noticed like, hey man, crude oil that's highly correlated with the equity market, it's up considerably. I'm going to get some shorts on in there. And so my technology position is right around a scratch, or maybe I'm down, 10, 20 cents, but I'm actually profitable on the day because my hedge, my diversified piece, is now starting to pay me a little bit. And yeah, it's just a matter of like sprinkling this stuff around here. You can see, I'm long metals from right here, and it's funny because like you look at those positions, Errol, on the face of it, and it's like, well, your technology stocks are now back to unchanged. The metals that you bought are down still, and crude oil is still up, and you're still finding ways to be profitable because you're nimble. You're buying some of that, you're selling some of that. When stuff is moving around, all I do really is focus on, looking at this watch list of all the net changes here, what's really down, and I actually missed this one. I should have earlier today. Micro Bitcoin, or Bitcoin, but I would trade the micro Bitcoin, was down, back down to 42.50, and it's bounced off of those lows a couple of times. And if you sprinkled in some long crypto against, some short, I don't even know, short equities or short something else, it's a matter of just taking all of this stuff that's on the board and not being on the same side of it, Errol, because then you can have a day like today where equities aren't bouncing back, man. Like, this stock market has not bounced back. It's not lower, but it has not bounced back. But you're still profitable because actually some of your hedges and some of the other stuff you're doing is paying you.
Yeah. So I know earlier you mentioned you will still kind of view these as 2 separate trades. So are you going to take these off like the same time as well? Or will you let one winner run a little longer than the one that's going against you? Or what are you thinking there?
So in this scenario, I should have been, if Frank was great at practicing what he preached, he'd be long 2 sticks, right? Like in this example that we put on there, I'd be long 2 sticks and, short one of these crudes. And in this scenario, I would probably take off one of the sticks and buy back my crude oil, which let's just say, all right, for all intents and purposes, I'll buy back my crude oil right here. And then, okay, so now I'm just long the 1 sticks, which hasn't paid me yet. It's at about a scratch here. And I'll look for that one to now on its own, hopefully be a profitable trade if this market can kind of continue. It's almost there. It's trying to bounce back a little bit. But that's how I would look at it, Errol, is like, I wouldn't just, the thing you don't want to do is take off that short position somewhere else and just leave 2 of the longs in here. Because now it's like, well, what'd you do, friend? Now you just took everything apart and you still have double risk in this market and you took off your hedge. In theory, I've got those 2 separate things and I took off one of my longs with that short that paid me.
Perfect.
Awesome, man. All right. If that all sounds good to you, I'm glad to have had you here for another great segment of Small Stakes, man, talking day trading and diversification. Do you feel like you're getting more into the day trade stuff, or how are you feeling so far about futures?
Yeah, 100%. One of the things where my mind is right now is just trying to get in kind of your mind. Like, what is the thought process here? You know what I mean? Like, what should I think when I'm in this situation, or what should I kind of look for? But again, it'll just come along with just when there's more opportunities in the market, execute on them, learn from it, just time. So it's exciting moving forward. So we'll see where we go from here.
Yeah, absolutely. And I appreciate, I feel bad for you. That you are trying to get inside my mind. That's a pretty dark place to try to get to, but I hear where you're coming from. And I can't emphasize enough, especially with the small exchange products, when stuff is moving around like it is this week, just like toss something out there, try it out for a couple of minutes, or, $5, $10, $15, close it if you're uncomfortable or whatever. But yeah, that really helps you. And I'm sure that's helped you, Errol, learn a lot of this stuff as well.
I wish I had a guide like that when I was first introduced to the market. It just gives you kind of just a better guide. When you first get into the market, it can be a little scary because it's like a foreign language, and you can be working hard at something and you don't even know if you're pointed in the right direction. So it's nice to at least be like, these are some of the things you should look for, and this is kind of what's important. So it's nice to kind of have that guide beside you too.
100%, man. I'm glad to have you here with us. It's always fantastic to get a fresh mind on everything here, because I get so bogged down in all this stuff.
Yeah, it's just such a new niche. Like there's, Tom isn't in the small products as much, but people might like this area of the market better than this, but it's like, let me dabble here, see what I really like, what makes sense. So it's kind of just cool to see all the other traders in the other areas of the market and kind of see how their process is,
And that's true diversification, right? Like strategic, like we just did a whole thing on day trading, and I feel bad because a lot of people will be like, oh, well, I don't day trade, so I'm going to tune that out. And it's like, listen, like I options trade and day trade. I invest in stocks. That's true diversification there when you're, using all of it. I think that's a great piece. So I like that. Yeah, it's a matter of like testing out the different niches. Anyways, our niche is done for the day. Errol, thanks so much for joining me. As always, follow Errol on Twitter, just Errol Coleman, and then also watch his show, Today's Assignment, on the Tasty Trade Network. I got that right?
Yep, that's right.
Awesome, man. Thanks so much, as always, for joining us. Everybody, thanks for watching. Splash into Futures coming up next. Another wild day in markets. I'm sure we'll have plenty of stuff to trade. Stay tuned. Peace.